Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 24th of November 2023. It was a shortened week this week in the US with Thanksgiving on Thursday and many people taking the Friday off as well. This market was open every day this week, although trading was very low on Thursday and Friday, about half or slightly less than half on Thursday, the normal volume. In response, the spread was narrower this week, which isn't surprising. I was expecting the market to make an attempt to consolidate adjacent to this little period of congestion here, this consolidation. You can see above that where the market failed to accelerate higher, and then the breakdown a month ago at this level. And price is going to attempt to find some support around this 103, 104 level. The next level lower is down here where the market bottomed last time, between 100 and 102. So spread did narrow this week, but volume reduced considerably and trading was very light on Thursday and Friday. So we're not getting a really good indication of the market's overall sentiment. And that's the case for many of the markets this week. So we'll just whiz through them pretty quickly because many markets had a narrower spread and reduced volume for a shortened trading week. But next week, you'll probably find there's increased volatility on Monday and Tuesday, early next week, as traders come back into the market after being away for a couple of days, and you'll see their true intent shining through. E-mini S&P. This is S&P 500 index futures. Spread was very narrow in this market this week. The momentum did carry the market higher. I sort of anticipated price might come up and challenge the 4,600 level this week. It didn't quite reach that level. Volume was very low. Friday's volume was less than half of normal, and Thursday was off completely. You can see the market has pushed above these old highs just slightly this week, but not much intent was being shown. US Treasury 10-year note futures. They've pulled back this week, similar to this week, 2 weeks earlier, with a narrower spread. It was contract rollover this week, but volumes were very low overall, and you can see the rollover volume was much reduced. Although sort of similar to last year, which was here. You've got the complex lows coming through here, which held price up. I expect this market will attempt to move higher in response next week, but you may get a test for supply early. So a bit of trading below the previous close, and then if supply is low, an attempt to push higher, and perhaps a challenge to this complex low just above. Copper price futures continued higher, the momentum's strong. This market was even attempting to move higher when the US dollar was also moving higher this week, which is a sign of strength. Same thing was happening in the other metals markets. The gold and silver markets were also attempting to move higher, or at least resisting the strength in the US dollar when it moves higher during the middle of the week. This is a sign that the underlying strength in this market is strong and sentiment is positive. I do note that volume was still above average in this market, so that was a pretty strong push higher with only a narrow spread this week. So just be aware that there may be a little bit of supply being drawn out from the left here. That might encourage some testing for supply early next week just to see how much supply is in the market. And that'll be trading below the previous close to some extent. When that does happen, the narrower the spread, the stronger the market generally. If it comes back deeply, it's being challenged to some extent and being forced to come back quite a bit more. So keep that in mind. The shallower spread when price comes back and tests for supply is a positive in the market, a sign of underlying strength. Gold price futures also kept the momentum moving higher this week. Does have this 3-bar reversal in the background, a shakeout if you like. Price did come back and test the highs of the shakeout here, and it appears that price is going to move higher in response now. You can see, if you look carefully, little test for supply early this week where price traded just below the previous close and then pushed higher in response, albeit on a shortened trading week. And volume was pretty strong in this market too, considering it was shortened, but price pushed higher. So the market's sentiment remains positive. Silver price futures, very similar to gold price futures, where it tested for supply at some point and then pushed higher in response. Here's the lows of the range, and prices pushed above all the recent highs. So momentum is relatively strong in this market, the sentiment positive. Volume was about average, which was still pretty good for a shortened trading week. So there's certainly activity in this market. Like crude price futures, traded as an inside bar this week. It's trading right on top of these lows in here where the market consolidated in the past, had this big down bar, closed in the middle, showing that buying support came in, then there was a period of consolidation through here, and the market's trading right on top of that level at the moment, right on top of the 75 level. I expect support would even increase if price was forced to move lower and down to this 70 level right in the middle of this congestion to the left, and then fade as price moved below that. But at this point, there's good support being found right on top of this old congestion level, and the market's attempting to find support and consolidate. Euro US dollar currency futures. Got the old lows of the range through here, and then there was a little breakout above it here. Narrow spread pullback on low volume, an acceleration higher. There was a little shelf through there, and prices edged higher this week on reduced volume. It was a shortened trading week, but the momentum's there. As I always say, here was the little test for supply below the previous close, and supply was found to be low, and that's allowed the market just to push up a little higher. There was no intent being shown this week really, but that was because it was a shortened trading week for the most part. British pound currency futures. Here's the old lows of the range through here. There's that shelf and the one above it. Here was the breakout above the previous highs. They come back and test for supply with a wider spread than the euro, so a little bit weaker, and the push higher wasn't as strong in response. But this market has moved higher this week on reduced volume and didn't really test for supply, if you notice that. So there was some momentum building, perhaps a little catch up to the euro to some extent as well. But the positive sentiment remains in this market, probably also due to the slight weakness in the US dollar. But the US dollar had a narrower spread this week, so it wasn't particularly weak. Aussie dollar currency futures also had a bit of catch up to do. Here's the lows of the recent range, and here's where the previous support came in. The old sideways trading range was through here. You can see prices come up to that level this week. and moved above the previous highs. So that's a positive. It did have some catching up to do. I'm not expecting price to really accelerate into this level. It may prove to be just banging its head up against this level for a couple of weeks, absorbing some supply. I expect there will be some supply drawn out from this old trading range to the left. Bitcoin futures continued to absorb supply at the new level this week. Just to put everything into context quickly, we have a accumulation zone to the left here and a breakout. Here's the highs of the range coming through here. Price broke out, tested, attempted to break out again and failed. Came back, secondary test, and then a push higher. This looked much more promising here. This was a little period of bullish absorption through here, and that led to a more serious breakout. Now I'm expecting there to be supply to the left up here. That's causing a few little issues at the moment, and in response, this market has been, over the last month, absorbing supply and grinding higher. So that's exactly what you'd expect to see at this level. It is a level where you would expect increased supply to be drawn out from the left, and that is happening to some extent. Now, volume was pretty high this week, but spread actually reduced and was narrow, and that's telling you that there was supply being drawn out. However, the positive close up near the highs of the week suggests that the market is comfortably able to absorb that supply. At least it was this week for sure, and infers that that will be the case next week until you find otherwise. So the market did a good job to absorb the supply being drawn out. The buyers were there absorbing the sellers, and that means the market is likely to attempt to push higher again next week. And I would say it'll grind higher. I'm not expecting it to accelerate higher, but we'll wait and see. Now, early in the week next week, because volume was high this week, you may find a test for supply, and that will be below the previous close in here. And if supply is found to be low, then there'll be an attempt to push higher. But I'm expecting it more grinding fashion than an acceleration higher. There may be a minor acceleration like this, and then price will come back, and overall you'll get a bar that looks more like this, and it'll be a grinding bar rather than a true acceleration higher. But we'll see. I'm expecting this market to be relatively positive, but having to absorb supply from the left. Back to the US dollar just quickly, putting the lines in. There's the highs. There's the recent breakdown. This was the breakdown bar. Very little follow through this week. Here's where price is attempting to find support, and the lows of the range of the next level lower are through here. So I would expect the market to attempt to continue consolidating between 103 and 104. If there is a failure here, then the 102 down to 100 become the likely range that price will trade in, which is down here. But look for an attempt to find support between 103 and 104. And if there is a failure, and you'll know it because spread will increase and price will really accelerate lower compared to this week's bar, which was much narrower. If price does push lower, especially from the open down like this, then you're going to find price trying to consolidate in the 102 to 100 level, and it probably won't recover back to 104. But if, however, price pushes up slightly early in the week, even if it's not a strong push higher like this, then you'll probably find the market will attempt to support in this 103, 104 level, at least for most of the week. Also, just be aware that volatility is likely to be high early in the week next week, with traders coming back from a 4-day weekend. So Monday and Tuesday in particular, you may see increased activity and increased volatility, which may not prove to be how the market eventually trades later in the week. Okay, thanks for your time. It was a little bit shorter this week due to the shortened trading week. Okay, thank you. See ya.